What's up, guys? We're going to start in about 10 minutes or so. Make your tea, get your coffee. We're going to start in about 10 minutes, okay, guys? So just hang tight. I'm going to go grab something to drink here, and we're going to get right into it. There's our scanner. Get everything up and running. Hang tight, everybody. All right, just hanging out here. Let me post. Let me make a couple of posts here, and we will get started. Let me bring up the live session on YouTube so I can take a look. Live session on YouTube. So take a look at the chat there. Okay. And I'll bring that up. We'll start in a few minutes, guys. Just hang tight. Here we go. Hey, what's up? Oh, thoughts on gold? Yes. Thoughts on gold. Let's jump over to gold here. It's in our supply zone scanner. It's in the supply and demand zone scanner here. Let's take a look and see what's going on because gold is already open. I'll go over to micro gold. Ah, nice. Okay, finally. Okay, so let me explain what's going on here. Go over to that 4-hour chart, okay? And let me refresh the chart here. And we'll go over the opening range here on it. I've got that. If you click onto that free trade plan, I don't know if you have that yet. That's what I follow here. I put everything kind of step by step in there for you. So there's 5 waves in an average trend, and the TrendCloud indicator here that I built, it's got an Elliott wave component into it. So it will count these waves. And do you see here? 1, 2, 3, 4, 5, 6, 7, 8, 9. It kind of just squeaked out that 9th wave. The candles turn ice blue. And you see how they're blue here? this is a warning signal that, hey, you may not want to go long on this anymore, okay, because the trend is extended. All right. So what did it do? It went it went 9 waves. So now it's really extended. Okay. Because it did break structure right there and it did close. So we got a break above, close above previous structure. That's a new structure high. And it pulled back into the trend cloud. We even got another signal and it didn't quite make it past. Didn't quite make it past there, right? So this is your first indication, we're starting to pull back. Okay, now it doesn't mean trend reversal per se, right? Doesn't that necessarily mean trend reversal, right? This would become trend reversal, right? Here, pulls back, doesn't quite make it in the extended trend, breaks through the trend cloud, candles start turning colors from yellow. Okay, it's going to be trend reversal, right? If this finds resistance and holds and breaks through this, now you have trend reversal. That is the pattern of trend reversal, okay? So we can only trade what we see, right? We can't, a pattern is not complete until it completes, right? So you can only make your best guess and take your 1% risk using your process or your strategy, okay? So today might be a good time to take a chance on the trend reversal somewhere, in here, and that might be on the opening range breakout. So let's take a look and see what we get. And so you see how where it's being represented on the 1-hour chart, right? Because we use multiple time frames. I go over all of this in the trade plan. On the 4-hour chart, we're still in an uptrend, okay? We're still in an uptrend. We've just recalculated, and this could now could do this or recalculate and continue the uptrend. Now, or it could go sideways, right? Those are your 3 patterns that this could do, right? There's your 3 patterns. It could recalculate, go up, go sideways, or start the count down. 1, 2, 3, 4, 5. Okay, so what's it going to do? Well, we don't know, right? You'll never know. You can only trade what you see and work through your process. And that's what we love. We love figuring out, the patterns and trying to get a better understanding of price action. So TrendCloud is a price action mapping system that gives you a process to trading supply and demand zones, the open range breakout, trend reversals. Okay, it gives you a process to put your strategy to. Because when you can read process clearly, now you've really got something. If you can read price action clearly, and you'll see if you come to the live sessions and you'll see we read the price action and we just tell the story that's on the chart and we have discussions about it. And it's quite fascinating when you put the pieces together. So you start off thinking, okay, extended trend, broke to the downside, recalculated. We're still up though. Why? Because trend cloud is green. The candles are still green. The yellow candles mean we could be transitioning to the downside. Be careful. And what we've got here represented on the middle time frame is in fact that correction. So all of this, okay, all of this is a corrective move being represented on the higher time frame, right? Or I should say, this is a high time frame corrective move being represented on the 1 hour time frame, right? So deep pullback on the 1 hour. Momentum is still to the downside. We've pulled back pretty deep, okay, on as far as momentum goes, but we have not crossed above positive 100, right? We haven't crossed above positive 100. So we're still safe to take moves to the downside. And what did it do? Looks like it pulled back into this. Okay, make that red. But like I said, you can't even bribe anybody in dollars anymore. They want gold, all right? So a lot of people buying gold, and I think you're really going to see people buying the dips on gold. Okay, so let's go over it. Put that opening range breakout. So the opening range breakout is still forming. Okay, it's 904. Okay, and we're expecting some sort of a downward move. So this could be a bull trap, all right, because momentum, we've got this deep pullback. The middle time frame momentum is down, high time frame momentum is up, and we're still transitioning to the downside. We're still trying to form some kind of a move. So look, there's mixed signals. How do you? Because everybody's always like, I don't understand. It's all mixed signals. The 1 hour trend is up. The middle time frame is down. Momentum's down on the middle time frame, but momentum and up on the high time. What do I do? What do I do? Well, you sit on your hands, man. You know. So when you see mixed signals like this, you best just make observations, because I would rather find something that looked like this. Let's say we're in an uptrend, right? We're in an uptrend right here, and we're also in an uptrend. Okay, is this it? Yeah, right here. Okay, so see this situation? This is the situation you want to be in. High time frame uptrend, right? Trend cloud is green, candles are green. We're even getting a signal here. Look at the stochastic. This represents impulse or correction. So right now, this is in, see how it's green? The bottom stochastic is green from here all the way up to here. That's an impulse move. And when it's red, that's a corrective move. So you can see this is like a little cycle indicator. It's just a modified stochastic. And when you're pulling back into the trend cloud in an uptrend, you're saying this is the corrective move. So correction, impulse, correction, right? Impulse. Okay, and that is represented here. It just helps you understand, hey, are we in a corrective move? Are we in an impulse move? And you've also got momentum to the upside. Okay, and so look what happens here. Right here, we break above positive 100 on that CCI. Trend cloud is green on the middle time frame. Momentum is above 100. We're impulsing up. Momentum is up. Candles are green on that high time frame. That's the situation you want to be in. That's the situation you want to be in. Hey, good morning. Good morning, Krishnan. So that is the situation you want to be in there. Okay, makes sense. So when a lot of people when you're asking about gold, usually people ask the most questions about something because they get unsure about their process because they see all these mixed signals, right? You're not you're confused for a reason, but you're really not confused. It's your logic and your process telling you, hey, this isn't fitting into our trade plan very well, right? This is not really fitting into our trade plan. Maybe we should just observe, right? So the scanner is going to pick up. The scanner is going to pick up everything. You can hold 20 contracts, futures contracts in here, or stocks, forex pairs, whatever you want, and you set it to 1 hour. Okay, 1 hour for your trend, 4 hours for your momentum. And when that is in alignment with each other, okay, it places it here. And these are this is just a mathematical equation, right? So we don't know. We don't know in this situation, we don't know if gold is going to do this, right? If that's going to continue up, or is it going to stay below the trend cloud and do this, right? If it does this, right, then we know, what do we have here? Right there, that if it holds and breaks through here, now we are in complete trend reversal. Now we start looking for the breakout to the downside tomorrow. Look for the breakout to the downside. Um, does gold pull up into this bull trap right here? That's what it's doing right now. You wouldn't want to go long here anyway, right? I mean, look at this. You're going long. Here's your opening range. You're going to go long right into a drop base drop, or here. Maybe gold wants to travel back up to to the previous day's breakout. And look what it did yesterday. So we like to stay away from mixed signals. So that's what I would say. Those are my thoughts on gold right now. Um, if you wanted to take a chance on this, hey man, as long as it's less than 1% of your total account value, take a chance, go for it. But why not take a chance on something that looks perfect? Sometimes you say to yourself, man, I really just want to trade gold today. I just got a thing about, maybe you heard an article, or you read something, and then you look at your process, you put your process in place and you're like, it's not fitting the process, is it? So, TrendCloud is great because it gives you a step-by-step, play-by-play of what's going on with price action. And that's what we want. We want to know what's going on with price action so that we could apply our process, no matter what process that is. If you can't apply your process, then what do you have? You have gambling, right? If you're not using a process and you're saying, yeah, this looks pretty good, I think I'll take this. We've all done it, man. We've all done it. And until you do it enough and get hurt enough, how do you when you're a kid, how do you learn not to do something? You're outside playing and you get hurt. Good morning. What's the settings again? The settings on TrendCloud, or I'll go over the settings. Oh, on the scanner, right? Doot, right there. Scanner settings. 1 hour, and you can make this whatever you want. This is your middle time frame. This is your high time frame. That's all it is. Yep. Middle time frame, 1 hour, high time frame, 4 hour on the scanner. Okay. That's it. 1 hour and 4 hour for the futures. For the futures. If you were doing stocks, okay, I would do 1 hour and daily. Where are you, daily? Right there. 1 hour and daily. If you're doing stocks, I just think the daily chart on stocks just kind of works better for price action. There we are. Okay. Scalper. I'm looking at the YouTube chat as well. I keep forgetting to look at the YouTube chat. Now I got you guys. All right. So yeah, guys, we're waiting for some kind of trend reversal on gold. High time frame. We're not sure what's going on. This is just a deep pullback on gold, and a trend reversal will look like this. It'll look like this. Deep pullback makes a move up, and then now if we break this, now we're in full trend reversal. So that's the pattern. That's what it looks like, right? It looks like this weird looking N or a lightning bolt, pull back, move up, break below. That's the trend reversal pattern. And it's represented very nicely on TrendCloud. It gave us warnings, right? Candles turned ice blue as if to say, hey man, the trail has gone cold. Be careful going long here. And what happens? Man, it squeaked out that ninth wave, 7, 8, and it just squeaked out that ninth wave, pulled back. Now it's recalculated. Okay. So being that gold is so strong, what we're thinking here is that this was a deep pullback. People are going to buy the dip on this, and it's gonna continue its move up. But it might go sideways for a while until it chooses a direction. Maybe we start seeing higher lows, right? And it squeaks out in some sort of ascending triangle. But look, that's speculation, right? That's speculation. Right now, we got this picture, right? Still in an uptrend, but it broke below that 50, and we are making a decision. So gold is making some sort of decision here. So we'll just observe, right? We'll observe, and we'll go find something that is more in alignment with what we want here. Okay. So on your supply and demand zone scanner, we're longer. This seems like there's more supply zones that are in play than demand zones. So that means market sentiment more to the downside according to our process among these 20 contracts from our watch list. Okay. So let's see here. Let's go over to crude oil, because we like to look at that every day and see what's going on. And what do I have set up here? I do have something set up here, but okay, let's erase everything here. Let's take a look. We got to drop down to the 5 on crude oil to look at the opening range. Go to the 5-minute. Breaking out to the upside. Okay, makes sense. Now, we are in a downtrend on the high time frame. We are correcting. We're in a correction phase up into the high time frame trend cloud. Okay, so here, let's get rid of that. So this is a really deep pullback. Okay, and let's get rid of this because the story has changed now. We're correcting up into high time frame trend cloud, right? That's the high time frame trend cloud. What do we have to the left of that? Because what we're expecting, right? Price goes into the trend cloud and we expect this move down, right? Well, what do we have? What do we need to do that? Well, we need this situation here on our CCI indicator. Right now, there's so much force to the upside on this corrective move, which is a downtrend on our high time frame. There is enough momentum to do something like this, right? Pulls up, pulls back kind of shallow, and then goes like this. We don't want to be in that situation, right? We don't want to be in that situation. We want to be in a situation where we get some kind of move out of here. CCI breaks back below negative 100, and then we take the move to the downside. Okay? That's what we're looking for. That's what we're looking for. And right now, we're getting this real deep pullback. This is a bunch of consolidation that we've just broken through. And whenever you break through consolidation of any kind, whenever price just squeaks past some consolidation, it gives it enough boost to push it back up to something more significant, right? So on the 1 hour chart, we've got this rally base drop that turned into another drop base drop and broke some structure, right? So we broke structure right here, right? Let's not get confused by anything. We broke structure to the downside, and that makes this right here very powerful. Okay, and then you've got, then you got this drop base drop. So you've got two zones on the 1 hour. Go to that 5-minute chart, or actually let's look at it on the 15 first. So we're hitting the previous day's high. Okay. Could it turn around from here? Maybe, but these are just levels of resistance, right, guys? We have consolidation, which is a level of resistance, and we've got previous day's high, which is a level of resistance. It's not a level of imbalance, okay? Those are just moves. That's mass psychology, okay? A level of imbalance is your supply and demand zones, and they create formations with the candles that look like this. So here you've got the first one. Here's a rally-based drop right here, right? Rally-based drop that broke structure. And we'll tighten up on it, okay? And then you've got this up here, which this candle really wanted. See that wick? It really wanted to go up and touch that area. So right here, you can see that this move out breakout, right? Look at the move out from this area here. Look at the move out. Boom. Sellers, right? Broke through structure here, right? This is an imbalance between buyers and sellers. In order to move price, you have to have an imbalance between buyers and sellers, right? So there are more sellers hanging out up here. And then they consolidated here and went down again, right? So, oops, I didn't mean to do that. Did you know you can lock your vertical axis? Like if I wanted to, I could right click and hit lock vertical axis. Where did it go? Oh, maybe it's left click. How did I do that? Uh-oh, I'll have to figure that out. Anyway, supply zone, imbalance level, break to the downside. All right, so when we return to this area here, and what do we got up here? We've got some level up here. That must be, oh, that's not, that is the two lines there. Those are the two supply zones that I drew. Okay, we'll just separate it like that, just to represent. All right, so you've got this area, but when we're pulling into this supply zone, okay, look at where our middle momentum is, our middle time frame momentum. It's above positive 200. Guys, that is a lot of momentum, okay? Even though we're right in the middle of the trend cloud on the high time frame, which, we want to see this. So we are there, but it's an extreme pullback that's represented on our middle time frame, and it would be an aggressive trade, okay? So pulling back into here to take this trade short would be aggressive because we are way above positive 200. And what happens if we do that? We put ourselves in this sort of situation. Pulls back, makes you a little money, and then does this, right? That's what TrendCloud is telling you could happen. The momentum is telling us. That that's the situation that we're going to put ourselves in. So, lost the stream. Krishnan, hit F5. Or let me get the do. If you lose the stream, guys, and if it starts acting a little wonky, just go to the live YouTube. Just go to YouTube. Okay. So yeah, so that's the situation. That's the situation you put yourself in with that. So on the 5 minute, drop down to the 5, and let's see what's going on with the opening range. Let's get rid of these lines here. Gary, good morning. Good morning, Gary. Gary, you may want to hit F5 just to refresh the stream. There's some people are saying there's a little bit of lag on TradingView. Nice. Hey, awesome. Welcome, Gary. Yeah, good deal. If you need anything, just let me know. You've got my number as well. And if there's any lag on the TradingView screen, guys, just go over to the YouTube channel and it's usually cleared up on YouTube channel. And you can also go back if you go to my YouTube channel and you just click on live. Let me bring that over here. Okay, if you go over to the YouTube channel, whoop, that doesn't. You'll see. If you go to the YouTube channel, you'll see everything on there as well. Just click onto live on the YouTube channel. And I believe this one brings it right to you. Yeah, there you go. Okay, cool. Very good. All right, so a little bit of a breakout. What's up, Hitch? Smash the rocket boost button. Good morning, Kazi. All right. The whole gang is here. The crew is here. Kazi, you looking at that crude oil? So we've got that. We're breaking through that consolidation. Middle chart is transitioning to the upside here, but remember, your middle chart is just representing the corrective move on your high time frame chart, right? So this is the corrective move on the high time frame, and we've got a little ways to go, right? So this has just started the corrective move. All right. So if price came back into the trend cloud here on the high time frame, right? And the stochastic here was up here and starting to hook back down, and you're in the trend cloud, that's a better situation to be in. Yes. Yes. So that's a better situation to be in. So it's very possible that it wants something up here. Okay. It's very possible it wants something up here to make the move down, but this is the problem, right? This is the issue. Because we're above positive 200, that's a lot of momentum, guys. That's like a major league pitcher has just wound up and he's really ready to throw that baseball, so that's the situation that you might put yourself in with crude oil right now. So a lot of momentum there to the upside. So we don't know, right? We should really look for something that's going to give us a better opportunity. Let's get over. Let's go over to. Well, let's look at the S&P here. If you want me to look at anything specific, guys, just let me know. Let's do the S&P here. It's on our demand zone scanner. Go to the opening range. Oh, it's not. What time is it? 9:30. Okay, we just opened up there. Just opened up. Okay, here's the line. Here's the orange line that's going to box out the opening range for us. Okay, so 9:45, we'll start seeing the opening range. Okay, look at this, guys. Look at this. Now here we see that we are, let's erase everything here. We're in a high time frame downtrend, right? Right. So S&P has just been going down, right? Just been going down. And look at where we're at here. Okay, we're just starting to break above the full trend cloud. We're not. The candle hasn't turned yellow yet, and this is just starting now. Okay. Yes, I know. I heard that too, Kazi. I know. We got to prepare. We've got to prepare for crude oil because most likely going to $100 something a barrel. But we're breaking above, right? So we're breaking through some structure here. We broke through this drop base drop. We're just starting to, right? We're just starting to break through that drop base drop there. Let's turn that gray, because we did break through it, and break to the upside here. Now, what's been happening? There's that drop base drop. Okay. What's been happening? People have been selling the rips, right? This thing rips to the upside, and people have been selling it. But we don't know what they're going to do, right? We can only trade what we see. So breaking to the upside on the 4-hour chart. Cycle indicator, okay, is above. It's staying above this area here, just sort of bouncing back and forth. The cycle indicator, which is a modified stochastic, okay. Here's the numbers that we use for it. Okay, KND 532. That's what you want to use. This is bouncing back and forth on the top of the swing. Okay, so it's a bounded indicator. It can only go so high. So when you see your stochastic indicator just sort of bouncing around up here, that's strength. Okay, that's strength. So this has got some oomph to it, and momentum is also up. Middle time frame chart is up. CCI above positive 200. We are looking to go long here, right? We are looking to take this long, but we've got to be careful because people have been selling those rips, right? They've been selling the rips. So I believe when the opening range breakout here forms, I think we're going to get a break to the upside. Okay. I think we're going to get a break to the upside. And where is that going to go? Where is that going to go? Let's take a look here. Come on. Recalculate there. Okay. Let's scrunch this up here. Okay, we've got the top of this opening range breakout. That's pretty significant. That acts as a really nice level of resistance. And let's take a look at this 15-minute chart here, guys. We got a gap. We've got this gap fill. I think that took place already. We hit that gap fill, broke through that. Okay, so this right here is looking to me, that's looking very significant there. And I think that's what we just kind of broke through. And then we've got this rally base drop up in here, right? Right, we've got that. Okay, so you see how it reacted? It pulled up, it hit, and then it just kind of went sideways. Hit again, made you a little money. So we've got, it's consolidated here, right? So we formed a little consolidation here, didn't we? Right? Let's make that purple. So we formed some consolidation here. Does this, create another wide opening range right in here? We don't know. We have to see. So if we do go long, it's going to run right into this thing. There's really not a lot of room to go, right? Because this is pretty strong, man. This is a rally base drop that broke structure right here. And it's part of the opening range breakout. Did you send me the? Oh, yes. All of that Yes, Gary, you've got access to everything. So Gary, on your chart, go to indicators, click onto indicators. Then you see this here, invite only scripts. Click on that. And there you go. You got everything. And just star them. Okay, just do a little star and it will be saved in your favorites, Gary. Okay. So so that's the story. This is pretty significant, right? This is pretty significant. Rally-based drop, broke structure, opening range breakout, broke out to the downside. There's a lot of sellers hanging out in here, man. There's a lot of sellers hanging out in here. Everything is pointing to making a move up, making a move to the upside. We're breaking through this. Maybe it just wants to pull back. Maybe it just wants to pull back like this. Pull back to the top of that. Pull back to the top of this consolidation here, right? And go from there to there. So we really don't have a lot. We really don't have a long way to go, do we? If the full opening range, maybe the whole opening range is going to look like this. Right? Now you're just bouncing back and forth. That's no good either, right? Do you see how we're thinking through the process? We have a process. That's why we're able to think through it. That's why we're able to think through it. Opening range, click on that. So that is what's going on. Yeah, there's a little bit of a lag here on TradingView. Everybody okay? Krishna, E-mini, S&P 411. Is it a good demand zone? Let's see, 41, 91, 50, 41. Oh, right in here. Yeah. Oh, right in here. Oh, okay. So on that 15-minute chart, well, let's take a look at it here. Let's recalculate the chart here. Refresh the chart. Put back opening range. Okay. And right in here, maybe this is what you're looking at, right? Nice, Krishnan. Yeah, that does look good. $41.94. Yeah. Yep. That does look nice. Yeah, see, very good. That looks nice. That you've got the support there. You've got a break of the structure. Yeah. Hey, man, excellent, dude. Yeah, really good. Really good. So the question is, do we ignore, the opening range? We don't know. If the opening range, if the opening range does something like this, right? Let's say this is the opening range and we pull back, it's going to break out to the downside maybe. Do something like this. Form that classical pattern, that classical head and shoulders pattern. That's a possibility. We have to see. Either way, right? Either way, we would have to wait for price to come back to that zone. We'd have to wait. And we love the fact we want to go, if we want to go long on this, we love the fact that it's going to break through all of this garbage here, right? We really want to break through this. Okay. So we want to see a nice, we do want to see a break above, close above. We want this candle to close above here. Yeah. Yeah, Kazi, I hear you. And then pull back, right? Now, on the pullback to this zone, right? On the pullback to here, we want CCI to look like this. Okay? We want CCI to look like this. We don't want this. We don't want to break below negative 100. Okay? We want that shallow pullback on our CCI, and hopefully it stays above positive 100, right? At the same time, look at your picture on that high time frame. Look at your picture on that high time frame. Remember, the trend is still down. So look at what this picture looks like. Kind of looks like a deep pullback into your trend cloud and then the move down, the continuation of the high time frame. So you see how we have the whole picture laid out for us? So as we're pulling back down into this this demand zone here, we still have CCI momentum on our side. We have got the stochastic and the momentum to the upside, right? But again, for that to happen today on the high time frame, it's going to look like a huge rejection candle, isn't it? Because this is the 4-hour chart. How long do we have on what do we got here? Okay, yeah. So we only have 14 minutes left. So we have 14 minutes left. So this candle's going to close. We really want this 4-hour candle. Listen up. We really want this 4-hour candle to close up here above this red box. We want this thing to stay above the 50 for sure. If we get a reversal of that 4-hour candle and it does something like this, right? And it closes like down here, oof, I don't like that. I'm not going to like that, right? We want this candle to close above trend cloud, right, guys? So again, we've got all the information. We've got more information than 90% of everybody out there looking at this, except for, big hedge fund managers and people who are doing insider trading. Oh God, that's good. So yeah, you just tell the story of the chart, right? What's the story? What's the price action story? Let's use a system to tell the story. Nice. Look at that. Now we're talking. Look at that. Nice break above that drop-based drop. Hopefully, we don't get a vicious reversal on that candle. That's what we're looking for, man. You see? That middle time frame CCI, guys. That middle time frame, this component to the trend cloud system, super important, man. Super important. And you really need that on your chart. And Gary, by the way, this CCI, okay, you would just go up here and just type in CCI, okay, and there you go, Commodity Channel Index. And all I did was I just changed this here. The upper band I made green, and the lower band I made red. Okay, in fact, I want that a little thicker. And you can just make it a little thicker there. Okay. Because I like to see those positive and negative 100 numbers. Okay. We are looking very nice. Now, Krishnan, look how far back now we got to go to that demand zone. Okay. So let me go. Sorry, guys. Opening range here should be on the 15-minute. There. Let's extend the historical line so we can see. All right. We officially have that opening range. Okay, well, guys, look what's going on here, right? We ripped through this. Very nice. That's what we wanted. That's what we wanted. We wanted a nice break above. This thing might go right to here, hit that bull trap and totally reverse. So we really don't have a lot to work with. If we do something like this, okay, if we pull back into this opening range, we're going to have to take it because we've got rally base rally here. Okay. Let's drop down to let's go over to the micro. Let's go over to the micro because beautiful, nice rip to the upside. We got momentum. Momentum's really with us here. Momentum is really with us here. And we've got rally base rally, and then we've got, all of this as well. Okay. So where's it going to pull back to, guys? We know we're going long on this thing now. We know we're going long. Let's just draw out on that high time frame, or actually it's here, right? Yeah. We know we're going long on this. Right in here is your high time frame trend cloud, or your middle time frame trend cloud. And it happens to frame trend cloud component to it. It's this would be a rip to the upside, a rip to the downside, hit that zone and go. So it's going to break past a lot of stuff, right? But the first zone that we see that broke through structure right there. Okay, so look, here's the logic. Do you see on the middle time frame here, see how this leg broke through previous structure? You can see it here as well on the high time frame. Where is the formation that caused that break of structure? Where's the formation that caused this break of structure? Okay, it's this thing, right? It's also this, right? You picked up on that. Good eye, right? But it's also this here. And this zone is closer to that opening range breakout, right? It's closer to that opening range breakout. This rally base rally is above the break of structure. I never touch those. Sometimes it does work, but I'm not going to take a chance on that. I would rather take a chance on the formation that's just below. And we do have this rejection candle. Look at this huge rejection candle here. Let me open up the chart more. Make this nice and big so you guys can see. See that rejection candle? That's a very bullish candle, right? In fact, this whole thing is a rally, base rally. Leg in, basing candle, rally. Why are these basing candles? Because they're located inside the full range, okay, of the leg in candle. So we've got, and look at how this pulled back, hit that zone, and then continued up, okay? So we've got a strong zone here that I would focus on, and then we've got this one. So if this one fails, we've got this one here. And on the micro, you can take a 0.5% risk and a 0.5% risk. What's wrong with that? If it works, you made money, right? Maybe this fails, you lose 0.5%. Maybe this one works and you gain it all back and then some. Okay? So that's how you have to think. I really like going through the thought process because that's what's most important. You really must know how to go through your process and talk to yourself and talk to the charts. Boy, people must think we're crazy. What? Talk to yourself. What do you do for a living? Okay, so let's go over to the risk manager. Grab that risk manager tool and let's figure this out. First access, just put it on that leg in. Second access line is your entry. Third access line is your stop loss, and we want to put it a few ticks below 1%, right? Can even do 0.5% here. Oops, that's 1.5. 0.5% of your $20,000 account, one contract. Okay, so you can only trade one contract. That's a 0.5%. That's okay. It's $52 there. If you want to do the full 1%, of your $20,000 account or whatever it is. If this is $5,000, you put $5,000 there. Okay, 2 to 1, 3 to 1, 5 to 1, 3 contracts. Okay, so it's $157 risk, and we can put that on there. 3 contracts. See, now we know we're cool, right? We're good to go. Now we know we're good to go. See how quick we did that? Because we had the tools. If you don't have the tools, then it's, oh, how many should, what's the point on that? How many, what, you can't have that. You got to be able to make these moves. So there's your opening range. How about this one? What's this one going to cost us? Okay. Move this here. Grab that stop loss. Bring it below. Grab your entry. Right there. Okay. This one, 1%, is you can do 4 contracts, $171. Those are the 2 zones. So you can set both of those. You can set both of those up. So do you see how, how you could just trade one or the other, or do 0.5%, or you have to be okay with, hey, if both of these fail, then I'm out 2%. Okay, it's all risk management, right? From the immortal words of Mr. Mark Douglas, Trading in the Zone, the money you make in trading is made in the risk management of the trade. Okay, see this yellow number here? This number is way more important than this number. Okay? This number right here is the number you should be focusing on, not this one. Oh, look at how much money I can make. Oh, I want that. Oh, yes, I want that. And then you forget about this. So this is the number you really want to focus on, guys. Okay? Let me put the book list. Let me grab the book list and put that in the chat for everybody who's new. Oh, I'm almost finished with the website, guys. With the new website, I'll post that and I'll see what you guys think. Here's the book list. Let's do that. There you go. Great books. Trading in the Zone. Highly recommend it. Man, it is like the most important book. I would say, look, hey guys, you're in the course, you're using, TrendCloud system, that is required reading. That is required reading. Let's draw out what we had here, right? Okay, there's the first one. Broke through that. We love the fact. We love the and the rule. Yeah. That's right, Kazi. Larry Height, the rule, super important, man. Wow, look at that rejection candle. See, people are selling the rips, man. People are selling the rips on here. So we broke through that. And you see how this zone here, this drop-based drop, broke through structure here, right? Where's the zone that actually did the breaking? Well, it's right here. Okay. See those wicks? There's a lot of wicks there. So we're right up in that right now. Let's go look at that 15-minute chart, see if we can refine that a bit more. Yeah, there you go. Okay, see what we've got there? We've got that previous day's opening range, and that's what we were heading for. And look at that. I mean, come on, guys. You can't make this stuff up. Look how we're reading the charts. Look how we're reading the charts. Okay, when you've got a process, you become really dangerous, man. Let me tell you. So you guys see the dilemma now, okay? So we're in this, there's a whole bunch of sellers here, and we've got so we're kind of running into this brick wall, and we did break through some structure, which is nice, right? We did break through some structure. The fact that I would still take these, because look at the momentum. Momentum is really strong to the upside on that CCI indicator. We are way above positive 200. Okay, this is 100. and this is 200. We're above 200. So when we get the pullback into here, I think it's going to do something like that. I think it's going to do something like this. I don't think we're going to even break through and go back into the middle unless big institutions really start selling the rips here. Here we go. Yellow candle transitioning to the upside. That's what we wanted to see on that 4-hour chart. Okay. Everything is pointing up. Hey, great. Great. We can take a nice 1% risk on our zone. Do we know exactly what zone it's going to pull back to? No, we don't. You never do. You never do. That's why this number right here, this yellow number right here, is the most important number on your chart. Because if we said, oh man, my process is so good, guys, come on, let's make some money. 10 contracts, come on, let's make some money. Yeah, you'll be out of business in a week. The E-mini S&P. You mean the full contract, Krishnan? The full contract? Or were you just asking that before? Oh, that was 2 minutes ago. Okay. Yep, so that is the situation. And the full contract, guys, the full contract's the same thing, right? Full contract's the same thing. Same picture. Same picture, right? Just more expensive. So on a small account, it's the same exact picture. There's the opening range. And we are just looking at, we're looking at the micro because it fits our budget. $20,000 account. You know, you can't trade more than $200 risk. Okay. Let's do this. Let's do a little lesson in Fibonacci. Okay, let's get rid of this and just focus. We're focused on what's going to happen here, and we're focused on which one of these is going to pan out for us. Wow, look at that rejection candle there. I'm telling you, people are selling the rips, man. People are selling the rips. That is quite scary. Okay. But we don't know. We don't know, guys. Okay. We don't know what's going to happen. We can only trade what we see, and we can take our buy 10. No, we don't want 10. Let's go 3. So if this pulls back and breaks through, we don't want to hurt ourselves, right? We don't want to hurt. We want a little scrape of the knee. Okay, we don't want to chop our leg off, right? So that is the setup. So we set it up. Okay. And that's all you can do. Okay, so that's all you can do, guys. There we go. Let's see. Anyone on? Nope, we're good. That's the plan, man. So there's that opening range. Let's look at it clearly there. All right. Let's put our scanner back up. Kind of starting to even out. Starting to even out a little bit. Let's go to the NASDAQ. Okay, let's go micro NASDAQ. And I believe we might be in the same situation here. Recalculate. That's that 15-minute chart. Okay, right? Broke through. NASDAQ, same situation. You can see the zone right here. Okay, let's erase all of this. Look at that CCI, right? NASDAQ, very strong as well. There's your zone right there, right? We also have this TrendCloud component, right? So here's your TrendCloud. Here's a zone in here. Where is that represented on the middle chart? Right down. Look how that rejection candle comes down into that TrendCloud area, right? Put the opening range on now. Okay, so NASDAQ, look at this, guys. So on the NASDAQ, what we've got here is a bear trap setting up. This is what we've got setting up on the NASDAQ. We've got more of a bear trap, right? Broke a little to the upside and now pulling back. Unlike the S&P, where we had a nice breakout to the upside and we're taking the retest. So we're looking for the retest on the S&P, but on the NASDAQ is more of a bear trap, is it not? More of a bear trap. So this might pull back. Okay, might pull back into here, but again, lot of force to the upside there. We're pulling down. Where's this going to go? Well, we've got that 1 hour zone right down here. And this is the zone that actually broke structure right here. Let's do like this. Broke structure right there. Previous day's open. It's very possible this pulls back to the previous day's open here. Okay, that's too expensive. Drop it down. Like that. There we go. Okay, so that's a possibility. Or it could come back and it could come back into this area. But the reason why I don't really care for that is because this took place, all of this took place sort of above that break of structure, right? And down here we have more, we have more of the beginning of that leg up. So I would draw it like that. I would draw it out like that. And take the risk there. Take the trade on that situation. Let's put Fibonacci on here and see what Fibonacci tells us. Right here, Fibonacci retracement. Okay, swing low to swing high, and we've got a 786 retracement level right there in that, right on that zone. Let's do the same thing with the S&P. Okay, go to the micro S&P. Boy, it really hit that zone. Bing. Swing low to swing high. Okay, yep, same thing. We got that We've got an 886 retracement level right here. Right there, 886 retracement level inside of our zone. Okay, see how I did that? Swing low to swing high. Here's 50% right there, so we can tighten up, reduce our risk. That's how you reduce your risk with Fibonacci inside of your zones, right? And we've got a lot of structure in here. So this pulls back. I'm really liking that because we've got a 50% retracement level, previous day's close, previous day's high. We've got all of that hanging out right here. Pretty nice. Then down here, we've got 886 retracement level inside of our zone. Great. I'm really liking this this micro trade here. I'm really liking the setup there. Okay, so from here back up to here in the next couple of days, boy, that'd be great. The Dow. Go over to the micro Dow. Let's remove everything here. Recalculate our chart. And now we can put on our opening range. Look at that. High time frame, break above structure, middle time frame, break above structure. Let's get a nice close above. If we can close above, well, we got 45 minutes left to close above that, So this is looking really nice here. This looks really nice. Look at that. Right there. Grab Fibonacci, swing low to swing high. 50% retracement level right there. Beautiful. And of course, you've got the same thing down here, 786. Those are the two zones there. Right, the Dow, right, micro Dow, much cheaper. If you want to take the two zones, if you want to take both zones, on a small account, I would focus on the Dow. Look at this, guys. This is a much better situation to take both zones. Okay. If you have a small account, micro Dow's looking nice. Okay. Guys, see that? 3 contracts can take a chance. It's $81. All right. And then 3 contracts. Okay. So you're, much better setup to take the risk on because the Dow is a little cheaper, right? Whereas NASDAQ and the ES, you're a little over $100 on each. So you'll definitely be out, a little more than 2%. It seems like the Dow upper zone is not fresh. 5 minutes shows more than 50% pierced. Good eye, Kazi. Let's check it out. 5-minute chart on the Dow. Micro Dow. 5-minute. Oh, wow. Look at that. Yeah. Good eye, Kazi. Yeah. Good point, right? Coming, but we've got this drop base rally, pulls back in. This happened, oh, what happened with Globex? Do we have a no? Okay, so Globe. Here's the overnight. So there's that consolidation in the overnight. If you put your Globex trap on there, pulled right up. All this consolidation, broke through that consolidation, returned, tested it, made the move up. Very good point, Kazi. Yeah. Yep. So, what's gonna work? Got me. Kazi, where's the crystal ball? Go to your grandmother's attic, get the crystal ball. Everybody's grandmother has a crystal ball in the attic, Get the Ouija board. We don't know, right, guys? We're technical analysts. You've got to weigh the risk and the so, looking at that, you can say, well, hey, this zone isn't fresh. Maybe we take the full, load of this, the full 1%. So on this, right? That's what you'd have to decide. So, can you take 0.5% and 0.5%? Sure. Yeah. Because we don't know. Then you just cover more ground. So we'll cover more ground if we do 0.5%, or we just say, hey, you know what? This thing pierced 50% of the way. Totally legit, man. Let's just focus on this. Do the full 1% on that one. That's up to you. That's just up to you. And it's a good plan. Maybe pulls back into here and you want to do confirmation entry or something. You go to those confirmation entry candles. Wow, and look at that. Look at that too. So pulled in, got that little confirmation. You can turn those all yellow, guys. You can turn those candles all yellow. Because you're going to take them either way, right? So as it's leaving, pulls in 50% of the way. I want you to zoom in on that. Pulls into the zone 50% of the way. There's your confirmation entry candle, and you take the trade just above that confirmation entry candle. Boom, gets you in, and you're making money. Okay, so you always use the confirmation entry candles when the price goes at least 50% of the way into the zone, like Kazi was saying. Then you can turn that on. Okay. And you're using that like, we've got this really wide zone. Maybe you're looking at like the high time frame curve, which is the 4-hour supply or demand zone that you drew out, the market edge, and price has gone in there and you're like, when is this thing going to turn around? You can engage those confirmation entry candles and start looking for, patterns on the lower time frame to climb out. We've got a process for everything, right? We've got a process for everything. Excellent. Very good. How about the Russell? What's going on with Mr. Russell? Let's erase all this. Previous lesson. Whoa. Russell is going sideways. Here's the overnight. Here's the opening range. Jump on that 15-minute. Okay, Russell's kind of going nowhere, right? Ooh, what a different story. What a different story on the Russell. Look at how the Russell never broke through that high time frame trend cloud. The Russell never, it has not broken through. Usually the Russell is like the little kid that's running around all over the place and the parents are trying to chase him, you know. It usually does stuff first, right? That's interesting. Okay, so the Russell is just starting to catch up to everything else. So the Russell's doing nothing. Okay. Scanner is picking it up. Scanner is picking it up to the upside. It's saying, hey, probably going to break out to the upside. It's just math. The math that's going on in here, it's picking up all of this, right? So it's letting you know ahead of time. But we haven't broken any structure, right, guys? Haven't broken structure. And wow, there's your range right there. There's your range. And on the high time frame, right, this is really your range. Actually, this, holy good Lord. Yeah, the Russell is range bound. So if we break out to the upside here and momentum is to the downside, momentum is below negative 100. What we're seeing here, this is this is the high time frame corrective move represented on the 1 hour chart. Okay. Where are we coming into? We're coming into the top of the trend cloud. We got the top of the trend cloud here in this sideways movement, right? There's your top of the trend cloud. This is the top of these wicks. And right in here, right? This is the last bit. This is our line in the sand, right? That's our line in the sand. So if you double click on your middle time frame trend cloud, guys, and you uncheck this 4 hour chart, now you can put your 4 hour trend cloud on that 1 hour chart and start watching it. And that's what we've got here. So here's the downtrend on that 4 hour and pulling back. Yes, that's right, Kazi, confirmation entry there. Pulling back into that high time frame trend. I love that. I love being able to see that. Sometimes you want to look at that high time frame on the lower time frames, right? And why do we like to do this? Remember, the trend cloud, okay, is a series of moving averages. It's got that Elliott wave component also programmed into it. It's got confirmation entry component programmed into it, but it's not a level of supply and demand, right? It's a support and resistance component. So you always want to look at the highest time frame for any type of support and resistance, right? Because a 4 hour moving average, a moving average that's on the 4 hour chart is more significant than a moving average on a 1 hour chart. A moving average on the 1 hour chart is more significant than a moving average on a 15 or 5 minute chart because it's mass psychology. You've got more people looking at the higher time frame moving averages, mass psychology. So anything on the high time frame, we say major level of support and resistance. That's the terminology you should use. Major level of support and resistance on the highest time frame, whatever that highest time frame that you're using is. So you always want to have a component of support and resistance, mass psychology, inside of your supply and demand zone, level of imbalance, right? Those are two different things. Level of imbalance between buyers and sellers is represented by your supply and demand zones, these green and red boxes. Levels of support and resistance are represented by your trend cloud. So when you have both of them together, wow, you've got something very powerful. And when trend is on your side, it's even more powerful. And when momentum is added to all of that, well, hey, man, you better take the trade. I don't know what to tell you, you know. And so what happens is if you end up over leveraging yourself one day, and you get really confident with, you make some money, you've got your system down, you're like, man, I love using TrendCloud. I know exactly what I'm doing. You get overconfident. And again, I'm telling you this from experience. I'm being very humble here. I've done it. You tend to say, I want to make 10 grand today. And you throw in more contracts than you should, and you wipe out a whole month of profit. And now you just chopped your leg off. That's not a scrape on the knee. Can't put a Band-Aid on that. You're like in the full body cast in the hospital, right? One percent risk, guys. So so Russell, I'd stay away from that. Much better opportunities on that Dow trade, much better. Okay, so we've got nice break above here. Now we can move our Fibonacci. We can move our Fibonacci tool to there, get a better representation of what's going on here, right? We can pull that back to here now, reduce our risk even more. 618 retracement level. That's the golden ratio. Right in the zone. Let's go back to the 1 hour. Go back to the 1 hour trend cloud. Nice break above, man. Nice break above. And is this going to be one of those days where it just breaks out and just keeps going? Maybe. Okay. Right. S&P. I always use good till cancel. I always use good till cancel on Ninja Trader. Okay. I always use good till cancel. You just have to, and then if nothing happens, I close it out. But you don't want to use day, Gary. You don't want to use day only, because that day trade could turn into a swing trade, right? The day trade could turn into the swing trade. Oh, nice. Oh my God. 4 years old. He's going to be a master by the time he's a teenager. That's awesome. That's awesome, man. Get him interested now. So there you go. So that is the story there. That is the story. So yeah, okay. Now look, guys, if this breaks through here, it's even better for us. It's even better for us. Yep, that's right. They are, Gary. These orders will be good. Even tomorrow, if it pulls back, it's just that you got to watch, right, Gary? Because if we get some sideways movement here, and that's sometimes what happens towards the end of the day, kind of goes sideways, hits, and then takes off. As long as that CCI indicator, Gary, as long as this doesn't happen, right? As soon as we break below negative 100, that terminates the trade, right? Because that goes against our process. So if this rips down here and CCI breaks below negative 100, or if it goes sideways for a while and then starts dipping below negative 100, then we got to be careful, right? So that's what you don't want to happen. But yeah, you can leave that on. We are way above positive 200 here. I mean, by the time this pulls back, maybe it's going to do something like this, and that would give it enough force to hit this one to move up. Fine, like no problem. We don't know. We don't have a crystal ball. So a lot of times what you do is you kind of speculate every possible outcome, and that's one of the other traps, right? You will never know what zone is going to work and what zone is going to fail. You never know, right? Kazi's grandma and the crystal ball, maybe they know. Your grandma in the attic with the crystal ball, she's the only one that knows these things, okay? But you never know. You can only trade what you see. And when you follow a process that's been back tested, that works, you just have to do that. And you got to think about this. Like we were thinking about, like, oh, okay, do we do we take both zones, Gary, or do we just take the one? What's the account size? Should I take 0.5% and 0.5%? Like we're looking at this micro S&P and we're saying, you know what? I got a $20,000 account. If both of these fail, I mean, that's over $200. That's over 2%. I don't like that. Well, if you don't like that, then you do this, right? Look what you do. Did that just solve your problem? Do you feel better about that? Then that's what you do. So now, Gary, we get to cover both of these zones. And now, okay, that makes sense, man, right? Now I'm safe. That's the name of the game, right? That's the name of the game. Mark Douglas, trading in the zone. The money you make in trading is made in the risk management of the trade. That's the process that you really got to wrap your head around and also think ahead. We get so caught up in the process of technical analysis that we forget, hey, if this fails, I'm going to be out 3% of my account. What? In one day? I mean, that's usually the cutoff point, right? 3 trades in a row. If 3 trades in a row fail, then you're out for the day. Okay, it happens, and you really that's how you have to run your business. So if you're looking at this and you say, all right, well, look, we've got some trades on the Dow, we've got some trades on the NASDAQ going. We got to make sure the numbers are right. You got to make sure the numbers are looking right. And that's what you do. Look how simple that was. We reduced our risk. You think of your trading account in terms of percentages, right? Like, what percent am I going to make for myself on my money today? You got to think about it in both ways, right? Usually we only think about percent risk, like, oh, I don't want to lose more than 1%. And then we look at dollars, on the profit, like, man, I really want $1,000 today. I really want $1,000 today. When you should be looking at what's the account size and what is the percent I'm going to make on my money on that account? 3%, 5%. That's why we always take those targets. 2 to 1, 3 to 1, 5 to 1, and you shoot for that every day, you're making money. All right, I only made 2% today. Okay, no problem. I made next day, oh, you made 5%. Oh, great. Scratch trade, small loss, 0.5% ding, 1% scrape on the knee. No problem. Put a Band-Aid. Oh, today I made 5%. That's how you got to look at it. That's how you got to look at it. Usually, Kazi's saying, yeah, I usually find that the zone below works better if they're very close because hedge funds like to do liquidity. Yeah, absolutely. That's right. Liquidity sweep. So Kazi's talking about different variables that take place, and there's so many different variables. You'll never know. You'll never know how many variables. So a lot of people, especially like engineers, programmers and stuff, they try to wrap their heads around trying to come up with a system that covers every single possible outcome, and you'll just drive yourself crazy. It doesn't exist, right? It doesn't exist, and so you shouldn't really simulate your trades that way, and you shouldn't trade that way, right? It's not our job, and I say this in every session, it's not our job to figure out what trades are going to work and what trades are going to fail. That's not our job. Our job is to follow a process that we know works. That's our job. And we're going to be careful with our risk. All right, let's cover some ground. 0.5% risk, 0.5% risk on both those zones, right? Or like Kazi, he'll say, you know what? I'm going to leave this one alone. I'm just going for this, and I'm going to trade my 3 contracts on that, and that's what you do, and that's how you run the show, man. That's how you run it. Really nice. Very happy to see that this is breaking through this zone. So these become more and more powerful as you break through zones, right? There's the top there. Okay, then we come into this little guy right up here, right? This guy here formed. Okay, so maybe it rips through here, hits this, and then starts to make a move down, right? Let's get rid of that. That's quite a parabolic movement there. That's just straight up, man. Look at that momentum on that CCI. That is just, that is super strong, guys. Very, very strong to the upside. So maybe it comes up, hits here, and, then, you've got, if it comes up and hits this and pulls back, what time is it? Yeah, 10:40. Well, we got another 20 minutes, right? So we haven't had that 10 a.m. reversal today, right? We haven't had a 10 a.m. reversal. This thing's just going up. What's the news? Is there any news on forward curve? 11 minutes ago, Wall Street rises ahead of Fed policy. Federal Reserve likely to hold rates steady. Okay. So the news is acting like a catalyst. The news is acting like a catalyst here. Data continues to show consumer strength and broader economic strength in the U.S. Okay. So the news is acting like a bit of a catalyst here to push this thing higher. And I don't know. It just may never come back now. We don't know. We don't know. But we've also got this rally-based rally that just formed here. That would be part of the opening range, and we're looking for deeper pullbacks, right? So look at the issue with this rally-based rally here. This rally-based rally, I'm going to make it purple just to show you. So inside of the opening range here, we've got a rally-based rally. And look at how this rally-based rally does not have a TrendCloud component to it. Let's move this up. Now the 50% Fibonacci retracement level is right in the middle of our demand zone here, of rally-based rally inside the opening range. That's a level of support, okay? But it's not a trend. We don't have TrendCloud component because this moved so rapidly, right? TrendCloud is down here. So we only have one little level of support inside of this opening range breakout zone. But down here, a little lower, we've got the 618, which is right at the top of our trend cloud, right there, right? Right at the top of our trend cloud, 618 retracement. We have a cluster of support levels, right? So when you see a bunch of support levels sort of bunched together, maybe you've got some Fibonacci lines in there, maybe it's a pivot point or the trend cloud component to it. When you've got these levels of support inside of your demand zone, it becomes more powerful, right? It becomes more powerful. It's more information. Yeah, we are just ripping to the upside, man. This thing just took off to the upside and never came back. Natural gas. Let's go over to natural gas here. Natural gas. Get over to the 5-minute opening range. Let's take a look. Kind of going sideways, right? Okay, so, well, right? Let's take the wick of that 4-hour chart, high on the curve, right? That's the high time frame curve. And this down here, here's the 1-hour demand zone. There's your range. We've got that trend cloud component right here. Right there. Starting to get a signal there. Starting to hook up. Right? Deep pullback below the below that negative 100. And this is representing, nice little sideways movement here. Here's consolidation. There's your consolidation. It broke out, formed a zone, and broke to the upside. Okay, so in a sideways movement, what do? We trade the extremes, right? This is a official sideways movement here. Here's the extreme high. Here's the extreme low. How do we trade it? Comes up into here, short it. Comes down into here, buy it, right? That is how you trade sideways. That's how you trade sideways. And look how it's represented on the opening range breakout. Back and forth, right? Nothing to see here spectacular. Gary, good point. Yeah, later today. Yeah, FOMC statement later today. So we can keep those trades on. We can leave them right where they're at, Gary. And hey, if they hit, we could make some money. So on your Ninja Trader or wherever, live brokerage, good until canceled. That's what we want on there. Okay, so natural gas just kind of going sideways. We're starting to hook back up. Didn't really pull back into, or did it? Just kind of missed that top of that 1 hour zone, right? 15. Oh, this is the 5 minute. Here's your 5 minute. Here's your 5 minute zone. Nice rejection candle right there. Go to the 15 minute. What's it look like on the 15 minute? Gap up. Okay. Oh, there we go. I like that. Rally base rally. Nice, strong rally base rally move. Woo, look at that. It just missed it, right? Just missed it. This could kind of do like this, okay? And that's how you would trade that extreme move. This stuff is expensive. $320 on a $20,000 account. You're a little over budget there. Okay. And taking a chance on a sideways movement like that's that expensive. Ooh, no thank you. Right? No thanks. We got better stuff to trade. We've got stuff to trade that's more in line with our process, and that's what we go for. Let's look at some currencies, guys. Man, oh man, the Japanese yen. I'm always talking about the Jap. What is going on here? Oh, no news. Okay, thanks. Japanese yen, we don't use the opening range on, right? Or the Globex. Let's get a clear picture here. Take a look at the high time frame. This is so interesting. Let's get rid of all this. Japanese yen just keeps going down, right? But look at what the Japanese yen does. Look how it makes these spike movements and then continues the downtrend. Spike movement, continue the downtrend, right? Here's something wonky, right? Break to the upside, break to the downside. It does some sort of extreme move and then continues the downtrend, all right? More so, it does that more than if you try to back test this with supply and demand zones, you get real frustrated because you'll draw something out like this and it does this. We hate that, right? We hate that. So what I noticed was, okay, Japanese yen, you want to play it that way? Okay. All right. We wait for this. We wait for this, and then we start looking for our zones. And that's what I've been waiting for. I've been waiting for some kind of wonky move here, okay? Let's go back even further. I mean, your eye catches it. Your eye catches it, right? We're in a downtrend. Oh, great. Okay. Zoop. This one made it, right? Take notice of this stuff. Now, you would have to have, remember, this is the 4-hour chart. You would have to have this order good till cancel, right? You'd have to have this order good till cancel here. There you go. You'd have to have that waiting, right? You'd have to have that waiting. Hey, one, 1%, less than 1% risk when we know it does crazy stuff like this. You could do that, or you can just wait for that to happen and then continue the downtrend. Pulls back into TrendCloud, rip down, right? Wait for the wonky candle. There it is. And then start looking for your supply zones to move down. Okay. In this case, when did that happen? September 1st, right? September 1st. Yeesh. You just held on to that sucker. And you're still just holding on to it, right? Well, you got yourself from September 1st to today, to November 1st. Okay, you got yourself a little over $4,000, and you just held on to this thing. But you would have to the contract would have rolled over, and you just roll the contract over. But that's what I am. This is my white whale. This is my Moby Dick, right? This is the hunt that we're on. I have to reread that book again. I've got to read Moby Dick again. But this is the story with the Japanese yen. Very interesting instrument to hunt. Okay, so it might do that, But this thing here went all the way up into here. So that's what I don't like. I'm waiting for that that crazy candle, right? Boom. I'm waiting for that spike candle, that bearish spike candle to happen again. And then I'm shorting this sucker. That's what I'm after. I'm out. All right, buddy. All right, Kazi, have a good day. I hope your son made some money for you. Let's take a look. Canadian, we made some nice money on the Canadian dollar the other day. Wow, here we go. Okay. Canadian dollar, high time frame, trend cloud. We're extended, right? Let's erase all this. We're extended, and we really don't want to be going short just yet. And look what we get. Boom. Break. Nice break to the upside. Momentum is to the upside. Cycling back up. Momentum is up. So the way we can aggressively trade a trend reversal, okay, the way we can aggressively trade a trend reversal is to ride the correction of the move, right? We're expecting this. We can ride the cycle right back up. Momentum's going to be going up, right? We're above positive 200, and we're breaking above trend cloud here, okay? We can ride this move if we want all the way back up. And that would be aggressive, right? Because we're still in a downtrend. We're still in a downtrend on both the high time frame and the middle time frame. So what So what do we do? If we want to wait, you can wait for at least candles to start turning green. Maybe it hits there. We have to find support. And then once we break above, now we start looking for our demand zones. Okay, we've got to have that N pattern, the nice pattern, right? Break above, pulls back, finds support, and now we broke through structure. Ready to go. Now we're ready to go. If you want to be aggressive, then you're riding this corrective move to the upside. Because what we're saying is, because we're extended, price wants to at least go somewhere above that 50 simple on any time frame that you're on. Okay, any time frame that you're on, that trend cloud turns the candles ice blue. Trend cloud is telling you price on this time frame wants to break above the 50. Okay, if it happened here, if the candles were blue on here, on this time frame, it would be saying, hey, price on this time frame wants to break above the 50, like right here. And it does, right? And it did it. Oops, what did I do there? Sorry, guys. I don't know how I did that. Uh-oh. What did I do? What did I do? Sorry, guys. I did something wonky here. Okay, we're back. And we're back. Right. So right here on the 1 hour chart, right here on this time frame, candles turned ice blue. What does TrendCloud want to do? Break above the 50, recalculate, and continue down. So that's what it did here. See, 5 waves, 6 waves, recalculate, 1, 2, break above. Okay, so we started going sideways here. Whenever you see 1, 1, 1, 1, it's just counted 1. It's just counting waves. You get a very clear representation of, okay, now this thing's going sideways. All right, 1, 2, 1, 1, 1, 1, 2, we're crashing back above, sideways. So why not, okay, on the Canadian dollar, just let it do it. You want to go sideways? Go sideways, price action. Go ahead. When I start seeing a third wave, 1, 2, 1, 1, 1, 2, 3, aha. Now my eyes are going to look at that and say, here we go. Okay? So very, very useful tool to count the waves. That's why you've got that Elliott wave mathematical equation inside of your trend cloud. Count those waves, and if you start seeing 1, 2, 1, 2, 1, 2, 1, 2, 3, aha, now get back to work on it. Okay, so all right, guys, that is it. That is the lesson for today. That's a good solid 2 hours. My voice is starting to go. 11 o'clock here. I will see you guys tomorrow, 9 a.m. If you need anything, shoot me an email. If you want me to make any videos at all, any special videos on the Canadian dollar or crude oil or opening range breakout, anything you need, you just let me know. I will make it and I will post it in the members area of your course and also on the private Facebook group. Okay, guys, I had fun today. I will see you tomorrow, 9 a.m. Take care, everyone.